The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back to the Diagnostic Trading Hour. Let's check out where the markets are at right now. The markets have been flying up and sort of chilling out at the moment. We got the S&P is currently up 15 points. We got the Russell up 23, and it's just paused right there at the 2 deviation level, and created a magnet when it flew up there. Trying to see if it can break back down. Might move up. Probabilities are probably pretty low, considering we saw all that sell-off happen right there at the top, and I'll go over that here in a moment. We got the Nasdaq up 49 points. We have the Dow up 107. Copper is currently right now up 2%, so massive move on copper. Gold is up 0.75. We got silver up 2.5% on the day. Natural gas right now is down at 2%. We have oil up 56 cents, which is a 0.5% move on the day. We got corn is down 1.5% after that monster move that happened Friday on the ag reports, along with soybeans down 1.5%, down 23 points. Euro dollar is currently up 3 pips. Aussie dollar is up just a mere 3. Pound dollar is up 20. Looking over at dollar franc, it's up 10. Checking out dollar CAD, down 6 pips. Yen pair is moving a little bit more, but not a whole lot. We got the U.S. yen's up 27. The Aussie yen's up 33. The pound yen is up 69 pips on the day. And euro pound is basically flat. And so let's see here. Looking at the markets, we don't really have a lot of news going on. It's a really quiet news day. It's a pretty quiet news week overall. And I'll pull it up. There's just like a Forex factory. You can also do like an investing.com calendar or whatever. And they label things. I don't think they label them correctly. They label them more as importance versus impact. And they call it impact. And it may, I guess, impact the currency. Whether or not it's going to impact it and make it move a lot is, often a different story. But anyway, so we got that right there going on, and there's just really, like I said, nothing on the list. As well as yesterday, didn't really have a whole lot to move. We had a business confidence report over on the Aussie dollar. I guess we'll pull that up and look at it. And it was labeled as a high impact report. And let me see here. All right, flip over from my soybeans, which are, by the way, down at 1 deviation and trying to move lower right now. So soybeans moving lower, but doing so on very light volume. Starting to pick up a little bit of volume, actually starting to seed some expectations. So it might be able to break down, move on down to another magnet level. All right, so let's go ahead and let's check out, like I said, Aussie dollar from last night. We'll pull that up. Maybe we'll do some analysis on a few different pairs. Looking at some of the different magnet pricing. And let's see, got to refocus the chart there. All right, so going to last night, seeing what we got. Yeah, oil, man, it's just bouncing between them. I'll pull that one up here too. So last night we had the 9:30 Aussie report came out, business confidence. The problem, check out the issue here. You don't have a forecast. So you don't really have a surprise expectation. But if you're looking at this trade, so we'll pull it up and look at it. And, right over here at 9:30, you see, you can't even tell there was a news event. So very quiet, volume much lower than expectations. If I throw ranges on there, what you'll see often when you see volume lower than expectations is you're going to see that the market often really is not moving outside of the close to close. And let me see here. I'll load this up. Takes a little bit longer, but it'll give you a better view of what I'm talking about. So on movement expectations there. And let's see here. Give me 1 second for that to come up while that's coming. Oh, there it goes. All right, I'll have to down the size, but I have everything set on 10 minutes at the moment. So we'll go over here. We'll change this up. We'll just change it down to 4 minutes for now. And we got that loaded up here. And then I'm also going to bring up oil. I want to show you how it's just bouncing between those two magnets. So the first one we called and the top one as well. But looking at last night, this is really very helpful. I was talking to a trader pretty late last night, actually. And we were talking about how whenever the volume stays below the expectations, often you'll see it stay, instead of the high to low, you'll see it stay inside the close to close. And so you can use that information, to your advantage of, where you don't expect it to break out. So if it pops up a little bit, maybe you put a butterfly on up here, and then it comes back down. You put one down here, so you layer into the butterfly by selling the binary above, buying the binary below. The biggest advantage for your futures, forex, stock trader, etc., is so that way you know whether or not to expect trends on that market. So if there's really not any volume happening, you shouldn't expect much to happen. And so, notice we don't really have volume exceeding on a consistent basis. Maybe once every 5 bars, probably not even that. And so that's why we're not really seeing anything break out. I also wanted to take a look over here at oil for you. We're going to pull that up. And we're going to look at the magnet prices that I drew on Friday for it based on the conversation that me and Tommy had on the Bull Bear Binary Hour. It hasn't been able to break out of those magnets, but it's definitely been trading between them. A little more volume, but still, today and this day, really hasn't done a whole lot. It has broke out of the expected volume. Therefore, we have broke out more often of the expected range of the close to close, but we still stayed well within the high to low. Now, what I wanted to bring up on the magnet pricing on oil, go over here and look at this, and went back and I basically drew different magnet levels that the market had hit or was waiting to hit. And so what we were looking for on the show in the morning was it to come down and basically hit 99.87, and it came literally right down to 99.87 and hit it. That's that first arrow, our first target. So it had to break through that with volume. If it doesn't break through with volume, what was going to happen is it was going to come right back up and hit this magnet price up here at basically 101. And it came right back up, and we got a high pretty close there of 100.9, 100.93. So let's see, that one's 100.93. So we got within like 7 ticks of it, and so basically we went right back to it. It couldn't break through the lower magnet with any kind of volume, and so went back and notice we got a big bump right there on the open, and oil sort of flew up, but it didn't have that volume to bust through the magnet. It didn't take it far enough through the magnet. Another thing on these magnet prices that I've noticed is a lot of times when it gets really close to that magnet, it will slow down. It may not hit it perfectly, or it may take it literally like another 20 or 30 minutes to move like those extra 3, 4, 5, maybe 10 ticks when it gets really close. And so, it's one of those things where you may want to even target a little bit lower, a little bit closer. For example, when it came down on Friday, and this is what trade I was looking at on Friday, it came on down. And let's look at it right here. We got to a low of 99.95. We were targeting like 99, basically 86. Okay, so it got within like 9 ticks. Pulls back, comes back down, but it takes like 2 hours after getting that close to finally hit it. So if you're ever trading a premium collection product, you want to be very, or an out-of-the-money product, or whatever, you want to be very aware that when it gets, I guess you could say a safety rule would be 10 ticks, but it all depends upon how big the magnet level is. But when it gets close, if you see it get really close and you're like, come on, just a few more ticks, that's a good sign it's going to take a while to get those few more ticks. Okay, and it's happened on U.S. yen last night. We were looking at it. Same thing happened. I'll pull that one up. We were looking at some of the magnets. And but it came on down, finally hit it. Once it did, bounced on back up, and you can see it right there. This is where you're like, come on, a few more ticks. Okay? And this one may not even make it. I don't know. Now it's sort of pulling right back down to the middle. And but you know what? It's going to stay in between 101 and 99.80 until it's able to break one of those two levels with volume. Now, where did I get those prices from? Okay, did I just randomly pick them out of thin air? or is there actually something to them? I go through and I look at the high magnet bars, and on oil I define a high magnet bar as 10,000 contracts. So I go over here and I'm looking at different levels, and I notice that I have this down close and these up close. I have this massive up close bar right here, high volume. I have another massive bar right here, high volume. And so I'm basically plotting these levels like from way back when. And so we'll go back. I actually put a vertical line from where I got the level. And so this level, this 99.80 level, let's see here. That's for a lower one here. Let's get rid of that. But, I bet I moved that one down because we had other price action below it. Yep. See, there's one right down here I have. And so I could just plot that just to make me aware, but it's so close. But, like, there's a range right there of a couple different ones. And so I'll go back and I'll find the different high magnet prices. Right over here, this is where we get this higher level, this 102. So like, where's it going to next if it does fly up? Right, so we take that forward. It's like, well, what if it did actually decide to bust to the upside? Where is it going to go next? That gives me that 102 like sort of target zone that I'm looking for, on up to 102 like 25. So lets me know where to shoot for on the upside, where to shoot for on the downside. And I went ahead and I went back here. We'll find where this level is. So we have a level right there, 99.80. And I can go back further and further until I find it, because you may have to go back pretty far in time to be able to find where the levels are hit. So you can see right there, this is probably a magnet that we set even earlier. There's a lower one right there. See, I put that little dot right there. So and it's a really small bar. It doesn't have to be a massive bar. But that's where I got that magnet price from, was right there on 4.2. So April 2nd. That's like a 97, basically 90, almost a 98 point magnet price. And you just keep scrolling back and you find the lower and lower levels. Here's 97.83. And, here's one down here, 97. So I'm trying to find these lower and lower levels each time, and I'll move it down. Like if it hits it, like that hit it with volume, that hit this price over here with volume. So I'm going to go ahead and now take it down to the next lowest level that we haven't been at that price. And I'll just keep dragging them and moving them. And it feels messy at first. I'll tell you, it definitely feels like, oh, I got so many lines on my chart. What am I reading? What am I looking at? But as you get more and more into it, you'll realize like the insane accuracy makes it worth any appearance of a challenge of being messy. Because you can then use this and then use this on other strategies, other systems that you're doing. And we'll take a look a little more in depth. We'll also dive into like what I was looking at in U.S. yen last night and how it just popped right to it. And we'll come back and we'll look at the Russell and we'll see what it's doing right now and what we sort of need it to do to break down to the next magnet. Okay? Stay right there. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so again, we're going through the magnets over here on oil and just talking about them step by step. And people are asking, what are the triangles? Basically, what I do is I go in and so I'll delete this one real quick. And let me zoom in on it as much as I can. Let's see here. There we go. Back out a little bit more. There we go. All right. So get this high magnet bar over here now. I mean, I could go for a lower level. I could go for like the 101.90. I like to take the highs of the bars if I can. Just to give you that extreme. That's also why I'll give myself like, maybe like a 10 tick, expect it to potentially slow down. But anyway, so right here, so I'll go in and okay, here's my spike. It drops down here to here's the low, okay? And I could even actually take it further down. So technically that should be where my low is, because this is a low since that spike happens. And then you notice right there I have it labeled where I was like, okay, I'm going to buy, because we never broke out of volume over here. So you're looking at all this at the bottom, and we never break, not break out of volume. We have exceeding volume, but we don't ever break what I consider high magnet. We don't break 10,000 contracts. So we're not breaking through the lower magnet that we have right here from earlier. So I expect it to pop on back up. It does, and okay, magnet filled. All right. I also have a magnet down here at the low, and I could adjust this a little bit, but this is where I set the strike. That's where I set the price. I think I have like 3 or 4 of these magnets all hitting at the same point, so I just went ahead and kept the tighter one. And so I go over here, and I got the magnet, and so I can draw from here. And now what we'll do is we'll just sort of go over. So it came down to the magnet. It popped on up. There's the high. Came on down and hit it. And we hit that right there. And notice we basically created another magnet right here. It didn't break through it. It went below it, but it closed up. So it really didn't break through that magnet. If we zoom in, so we got down here, low volume, and it closes up on high volume, not down on high volume. So it's not going into it. Okay, so we don't expect that big move back down. What do we expect? We expect it to go back up. And so what happens? Well, let's back it up. Let's look at it. It's exactly what it does. It's right within that range. So we go back over again. And now we got basically a little magnet spike down here. We've moved it down a little bit, but, I'm just going to keep it at the same level since we've been hitting that level over and over again. And we go up. Now, we didn't quite get to the high over here. And, now we're waiting for that magnet to refill. Okay, so this one hasn't been completed yet, so there's no triangle. If you wanted to, I guess what you could do, just, thinking outside the box, you could draw it, bring it down right here. And then you could open that up and maybe change, like, the color. Make it something light. Just while you're waiting on it to fill in. Something else to notice is we didn't hit back up on that high area again. Like we got close, but we didn't hit it. And so that does show a little more strength, potentially to the downside. Because not only were we not able to break that high area with exceeding volume, we weren't even able to get to that same high price at this point. So that shows 99.80 being a lot more reasonable target. Now, we only have another hour left in the day on oil. So you want to be aware of that. If you're trading like Nadex or whatever, just be aware of that. I mean, we hit it like right at the end of the day. Right there, we hit at 210. And it started its move pretty much like where it's at now at about 12:10. So it started a little bit sooner. Whereas right now, I guess we started at about 12:30, about 12:10, 12:30. So about the same thing, except for notice we had that nice volume down move. We haven't had that volume down move yet. But if oil is going to go down, and if it's going to go down today, what would we expect it to hit? We'd expect it to hit 99.80. So then what could I do with that? I could go in. I could pull up Nadex. I could pull up my spread scanner. Okay. And give me a second. I'll open up the scanner for you. And let's see here. I've got to pull up one more thing. There we go. And it'll render over here in a second. All right. So now that'll be coming up on your screen in a moment. Trying to see something. Okay. I'll have it up and ready. We'll look at it. Basically, we're looking for a strike around a little bit above 99.80. So, be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, looking at oil right now, looks like it's sort of trying to head down. I don't know how far down it's going to get. Like I said, we have less time than before. We didn't get that big oomph move that we got last time. If we want to check out, like if you sort of minus the big move there, we got a move of about 55 cents there from pretty much current time to close. So if we got 55 cents, that would take us down to 100, and that's what we're targeting. So let's go ahead and look at that. And if I pull up that contract, what you can see is like what contracts are available, which ones could you take advantage of, and it may not move, but you're talking about a $5 risk trade with a reason to go for the price. Okay, and 55 cents really is not a hard move on oil. So, I can go up here. Let me sort of show this to you right here. So if I was going in and I was selling oil, I'd sell like the $100 230 contract. That gives me, basically another hour for it to move about 50 cents. It can move 50 cents in a heartbeat if it wants to. And then so I might take profit to buy back, okay, like at 57. So pretty simple trade, but just going in there and basically selling it for 95, 96, 94.75, whatever it is right now. And then as soon as you sell it, set to take profit to buy back either one or half at 57. The reason I say one or half is one, it's not bad, but let's say you're doing like multiple contracts. If yours is $5, you buy back at, let's say you sold it 45 or whatever, and you bought back at, well, just to make the math easy, we'll say 45 or 55. You made $40 on the trade, okay? So if you did that on half your contracts, that's an incredible return. And then if you went back in and you put an order in to buy them back, okay, like I said, just half of them, and then you left the other ones alone and you watch it and monitor it. Now you could let it go to expiration. You could let it buy back at 10. I would recommend putting like a buyback at 10, okay? And, you know, to figure out what that buyback should be is you always want to buy back before the liquidity dries up, per se. Yeah, I see some people doing that trade right now. This is a $5 risk trade, so make sure you're not, don't go and go, oh, it's only $5, I'm going to do 100 of them, okay? I mean, use some common sense. But you have about a $6 wide bid-ask spread, so I don't want to go in and buy back at like 95 because there won't be any volume. Notice how we go from 200 contracts down to like 10, okay, whenever there's no bid, because there's a $6 wide bid-ask spread. So there's not a -2 bid, so it's going to be nothing. There's nobody willing to sell it for no profit potential, okay? So I want to make sure I'm getting out before the liquidity dries up to 10, and that just happens before the bid-ask spread disappears. So if I know it's 6, then what I do is I like to add $5 to that, okay, if you want to have a more conservative exit. So if I know it's 6, add 5, that's 11, so like that's a buyback at 11, like on my other half, okay, on the trade. So pretty simple trade. I'm going to go ahead and I'm going to edit my orders to do that right now. But it's already up a little bit, so we'll see if it keeps going. But so I got like 35 contracts on. I'm going to go in and put, we'll just say 18 of them. Here we go. I'll show you these. Pull this up. So I got these in here, and I sold for like $95.29 was like my average fill. So I have 35 of them on, so I'll do 18. I'll buy back at say 57. Okay. And there'll be a lot of liquidity there because that's at the money. At the money is always going to have the most liquidity. So I got, and I put that in to buy back, to buy. Here we go. Let's click that button. Okay, as soon as you click it, then it opens it up, and I just type in 57. Okay? Hit place order. Close that on down, and I can look at, any of my working orders. So scroll down here. Okay. Oh, I put it in for 35. I need to double check that. Let's change that to 18. And then hit amend order. Okay? And then I could go in. I could put in the other, 17 if I wanted to. I'm going to show you just a few different ways to do this. I could put in 17. There's somebody trying to front run. It ain't going to help you. But 17, I'm going to put in to buy back at, say, like, $10. Okay? Or $11, whatever. Hit amend order, place order right there. And so I put that in on 17 of them. I got 18, that's 35. So that's one method of where I can go in, I can take profit, and potentially even let my profits run a little bit. Okay? Now another method I could go, what is my total risk on this trade? So I can go, okay, my total risk. And these are all methods that will give up some of your profit, but the idea is also, of course, to not only profit, but reduce risk. So if my risk is $5 times $35, it's $175 risk. What if I took a third of them to eliminate my risk? Okay? So what would I need to make on, let's say 12 contracts. So divided by 12, I need to make $14.50. Okay? So if I can make $14.50 on 12 of my contracts, that'd basically cover all my risk. So I go, okay, well, let me go in. Let me grab this. And I'm going to adjust this one to 12. Let's leave that one at 11. That's good. Or, we'll change it to 11 contracts, where I'm going for $11, okay? And then we'll do, say, 12 contracts, 13 contracts. let's see, 24. I'm going to need 12 at 15, so 12, 24, 24, 35. That's 11. All right, so I guess we'll just do 11, 12 here. Yeah. So 12 contracts I'll go for 57. Okay? And then I'm going to do one more as an example. And I need to make $15 on this. I sold it. Now, depending on your sell price, that's going to vary. I sold it at 95. Basically need to make $14.50. So, and I sold it at 95.25. So basically, I'm going to pull up a calculator. It's going to make life easier on me. And I'll put it in there. I understand they tick in quarters, so you can only enter in quarters. And so I'll go in here and I'll say, okay, 95.29 minus 14.58. Okay, it's 80.71. So I'm going to put it in like 80.50. So I'm going to go ahead and put in an order to buy back 12 of the contracts. So that's my full 35 for the price of, let me bring that back up. I had it up just a second ago. $80.50. So if it just pops down a little bit, I've removed my risk in my 35 contracts. I've made my $175. Okay? So, and again, that math is basically going in to make, $14.50 times 12, basically $175 of risk I have on the total trade, because I'm pretty much risking $5 times 35, which is $175. So my first group eliminates my risk. It's closer. It's easier. My second group takes a nice profit. My third one makes a massive profit if it gets hit. Okay? But if it doesn't, I'm still break even. If I just get that first level, I've eliminated my risk on the trade. And now I have money to take the next trade on. Okay? So I go in and I place that order. And, but you definitely want to make sure, it's all depending on how many contracts you have on and what you're doing. So, but you want to make sure you make enough. So, like somebody I can tell put an order in there to buy for 84. It's probably listening to the show right now. Does that cover the risk on all of your contracts? Is the question you need to ask yourself. Okay? So if you only have one other contract on, and let's say you risked $5, $10, just think about, did that cover all the risk on my contracts? And if it did, sweet. You can layer those in. Now you see, like, there's a lot more depth here. We just can't see all the layers now. All right? Because other people are putting orders in. So obviously, I'm not recommending you do anything live. Whatever you decide to do on your own is your choice. And let's see on. All right. That contract there. Okay, sorry about that. Just a little radio silence for you. But putting the trades on, so we'll see. I mean, it's really oscillating right now. We have an hour. I mean, it could just stay flat. And this is the good and the bad about the magnet trades. Okay. When they work really well, and you can make a lot. Okay. If you do them the way I'm teaching you, when they don't work, they just don't work. It just doesn't move. But you don't lose a whole lot because you're using the defined capped risk on Nadex. You don't have to worry about a stop loss. You don't have to worry about ticking against you. You're basically just hoping it'll have like one nice pop before it's all said and done. Okay? So, I mean, if, like right now, it obviously is oscillating a lot right here. If we zoom in on it, everything's sort of oscillating right now. But it's oscillating right here. Came down and just doing this. If it can pump through this little level. So there's a little bit of volume, a little bit of expected volume right there. So if we can break below that 101.35, that's where that's going to be a sweet trade. Now, if it does break through it, you're going to see that premium pop up. I'm trying to get my $80 ones filled like out of the gate. So instead of only risking 5, if you try to get in at that point, you'd be risking 20. So you can lose a lot of trades, like a lot. If you're only risking 5 to make 40, you could. It's not all about probability. I remember I was talking to a trader last week. I was like, okay, so I'm really going for like 70% of my trades are profitable. And I'm like, hey, that's great. As long as your profitability lines up and, it's whatever you lose doesn't outweigh what you win. Because if you lose 70, in a losing trade, and you only lose 30% of the time, and you make 30 on a winning trade, and you win 70% of the time, then you're going to net 0. But I was like, Another thing to look at is some of the best traders in the world have horrible win percentages. All right, but they make a lot when they're profitable, and it more than covers up for it. Turtle traders are a great example. They're not going for a high win percentage. They're going for a tight stop, sort of like this idea. But when it hits, I mean, they make a massive multi-100%, return or more on their risk, okay? So remember the idea here is, you can go in with that low risk and look for that trade. And you got to do them consistently, and you got to be consistent on your risk. You can't go and risk like 1 this time and 10 next time and 20 the next time and 1 the next time. So you have to be very consistent on your plan. And ideally, you have a defined method for entry on what you're doing. The more defined you can get that, like when we did the gold trade last Friday, Tommy was looking at, hey, volume came down, it spiked, it couldn't break higher, it turned around. This is where it's going. I'm looking at it, I'm like, hey, I definitely see the volume thing you're seeing. That makes complete sense. And then I see a question. Question. Then I see the pattern I look for a trending trade pop up, and that basically confirms the trade for me to get in. So this is just a really low risk trade. I mean, $100, whatever for me. Like, it depends on your account size of how big that is. But you can do it with a $5 trade. I got a question coming in. Al from Boston, man. How's it going, Al?
Pretty good. How you doing?
Hey, doing great, man.
Terrific. Glad to hear it. I missed the beginning of what you were talking about on this trade, and there's not much time left, but is this still doable? Or
it's still doable. Whether or not it's going to hit it, we don't know. But we just got into it about 15 minutes ago. So
yeah, is this definitely a bull spread you're talking about?
No, this is a binary.
Oh, well, that's why I couldn't access it. See, I didn't hear that part. I came in late.
We're going into what's called a magnet level, where basically there's a massive volume spike at a certain price level. Yeah. And oil has basically been bouncing between these two levels the last several days. So you can see basically up here, down here, just over and over and over again. So what we're doing is we're targeting that level. Now we're only risking $5 on the trade to make, if you just did the first level there with that buyback at 57. So, I mean, you're making, $40-something on the trade. If it doesn't hit it today, it's going to hit it tomorrow. You can risk another $5. You could do that, every day this week, risking $5 to go for that target. You could still come out ahead if you lost 4 out of 5 days. So it's a very low-risk trade.
Are you just going with the weekly or the daily? You're going to take
I'm definitely doing the daily. Day? Yeah, I'm definitely doing the daily. Yeah. Okay. You're going to make more in that shorter move when you hit it. If we look at the weekly, let's see. What are the weeklies for 100 right now? We're risking... there isn't even 100 on the weeklies right now. There's 100.25. There's a 99.25. So you're either going to risk $85 to go 75 cents lower, which is a massive difference, or you're going to be risking $54 because that's where the market's at right now. So we're able to go in and really define our strike better with the data.
What's your target on the low end?
99.90.
How far do you think it's going to go down?
99.90.
99.90.
Yep. All right, we'll be right back.
Okay.
Hey, thanks for calling.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. All right, so anyways, that's our oil trade. So we got on there. And pretty simple. Wasn't sure if Al, did you stay on the line or did you hang up? All right. So I figured you were done with the questions. I just want to make sure. Didn't want to leave you hanging there. All right. So, yeah, we had the magnet price. I mean, we hit it again, come on up, coming back down. We haven't hit the upper magnet price yet. So, I mean, it could also pull on back up to 101, right? Always possibility. This would be a way to do a very cheap strangle. Whether or not it's going to hit it or not by 230, either way, we don't know, but it's definitely going back to these prices. And so like you could have woke up this morning, and oil opens back up at 6, okay? But yeah, you could have woke up this morning, looked over at it, oil's down here at 102.20. You could have went and targeted this level up here. Remember, get out. That's why I have that 43.57 rule. So if it gets close, I'm still getting out. You also could have targeted the 98.80 level. Now, it would have cost a little bit more money because we had more time until expiration. So just be aware of that. But it's a very simple way to apply, different pieces, putting different pieces together. Personally, this is just a very simple method on the magnet prices. For the trades that I go big on, I really like to see the confirmation. So, an example, if we're going over looking at the Russell, okay? So the Russell has a magnet price actually down here of about 1110. And you can get into 1110s, like 14s, 16s, 18s for really cheap right now. But it established a magnet. If I go over and I pull up the Russell 10-minute bars there, you can see we got in here, and we actually have an older magnet from a little while back. We see here. I don't have to go into a lot of detail. But basically, we have an older magnet sitting right at about 1125, which is also at a deviation level. And you can see how it came like right down to that point and bounced off of it. So it's got to break through this magnet to drop down to the next one. If it does, you have a very low risk trade at a very high profit. Right now, what is it looking like it's doing? Well, whenever it popped up this morning, okay, we actually established a magnet way up here. So when we got that new magnet level, I mean, we had all this massive volume up here at the top. And we can back out. We can see, how relative is massive, and is that really massive? Yeah, we got volume like at this level. We're definitely in the top group there. Okay, so when it popped on up here this morning, this up close bar there, that basically made a new magnet in and of itself. And so what it's been doing is it's been oscillating between these two magnets right now. There's also a magnet right there at 1125, so it's been bopping between 1125 and 1129 over and over and over again. Okay. If it breaks below that 1125, where are we going next? My next target from there is really 1110. You just don't need to select that low of a strike. Now, if you're using like spreads or you're using futures, you can go even further. The binaries, there's no advantage because, why would you go in and sell something that has no greater benefit for the same risk? And to explain that to you, let me show you this over here. And let's see, what do we got? Pull up the Russell. Like right now, I mean, you can get the 1120s for 92.50. You can get the 1122s for 88. But like, why would you go in and sell 1112s for 96 when you can sell 1116s for 96? And really, I mean, if you can sell 1118s for 95, why take on that extra risk when there's no real... You can't make any more money because it's capped on the profit. So you're only talking a $5 or $6 risk. So it really helps you like fine-tune what strikes to focus on. And you may have that magnet may be down 1110, but hey, I can choose an 1114, an 1118, 1120, just as easily. All right, you have a great day, and I'll catch up with you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.